What's up, guys? Welcome back to another episode with Trading with Magic Mike. I just want to go ahead and cover a little bit what we covered on our last lesson, creating that trader mindset. You can check out the video here I've got on my YouTube channel as well. But powerful video to kind of help create that mindset. In this lesson, I kind of want to cover, what's the elements to improving your trading mindset. It's better to identify these issues and then try to attack them and understand, where you're messing up, where you're having difficulties achieving over certain scenarios and such. So it's good to be able to understand that first, and then you kind of want to attack it and improve those trading mindsets. You want to be just, understanding it first and then finding ways to tweak it, improve it, and help your trading scenarios. I mean, we go through so many battles in trading that, our minds are the biggest trick games in the book. I mean, you come across a play that just looks downright beautiful and everything, you just attack it, you get in there and ends up being your biggest loser, or just end up having to cut it. Nothing just works right. So I want to kind of go over a lesson with you guys, as far as trying to overcome those situations to where, how do I improve these steps? How do I improve trying to make my mindset, having these different routines and different scenarios to, how to help it. We always want to help our problems. We don't want to keep those problems to just keep growing and never having a solution. I mean, you've got to have a problem. You got to have a solving, so you got to be able to solve those problems without just them problems just never being solved. I mean, if you're going every single day trading your account, you're like, I just got to find that one winner. It's just going to turn me around. I need more money in my account to beat the PDT rule, or, all these different cycles to that. It's like, no, you can trade with literally, $100. Those guys are actually going to be going through trading with $100 starting this next week. I'll go ahead and pull it up on my Twitter account, but I've got it right here. I posted a tweet where I started a $99 challenge, and we're going to be covering this $99 challenge throughout the week. It's going to be in the chat room, and we're going to be going step by step on covering this as far as entries and exits and being very transparent with this account. So I want you guys, if you guys want to follow along, you can go to my Twitter account. I'll have a link posted in the subscription of this video, or description of this video. So just go ahead and you can follow the link as far as going to our chat room. Anyway, without further ado, let's go ahead and get started in this lesson. And I want you guys to be able to follow along, be able to take notes. It all depends on how lazy or how, dedicated you are to your trading career. Okay. We don't want to be, if we're a lazy trader, we're not going to get ahead in life. We're not going to, we're just, we're going to be failing at what we want so badly. Okay. We're going to be failing at the success or the mindset of the success that you guys want to really achieve. So trading the financial markets can be a tough journey, especially if you constantly feel that your mental energy is depleted and that you have a difficult time to focus on the markets. Fortunately, there is an effective way to return the excitement that trading carries along by improving your trading mindset. In this article, I want to go ahead and take a look at what a trading mindset is all about and what it has such a large influence on your trading performance. Are you short on time? Here's a list of the most important points to develop a positive trading mindset. Okay, number one, I want you guys to develop an effective morning routine. Okay, the highest volume of the day is always in the morning when markets open. Wake up earlier than usual. Okay, working out and meditating early in the morning can help you to approach the market relaxed and calm. I don't know what kind of time you guys wake up, but as a full-time trader, I've learned that the best process is literally waking up literally before pre-markets. Okay, I do trade some big board stocks where I wake up in the morning and pre-markets start 7 a.m. Eastern Standard Time. Sometimes it's earlier than that, but I don't really trade earlier than that. I'll trade as early as 7 a.m. Eastern Time. So I'll get up at 6, go for a jog down the street, do whatever that makes you feel, kind of get your day rolling, get you a cup of coffee, something to kind of just wake up your mind and get your, situation kind of developed to focus the day head on. Okay. And you can get up back on your trading platform about 15 minutes or so earlier before pre-market open. Set up your scanning tools, be able to search on what is moving that morning, check the news, check out different scenarios. Whatever your trading setup is first, as far as understanding, preparing yourself for the day. Okay, it's a mental preparation. If you go to let's just say you guys have a business interview of some kind. You don't want to go unprepared, okay? The same situation is with trading. Every single day you want to be prepared for what you're trading, okay? And sometimes I'm up late at night the previous day getting my day all set up for the next day. It makes it that much easier to prepare for that next morning. But sometimes, you want to be able to be prepared, understanding your trade, what's your trade plans, writing down your entries, exits, and your risk, and certain trade plans as far as, what you're expecting on news and fundamental changes for some of these companies. And it makes it very crucial to be prepared, okay? So, get yourself a solid morning routine going. People with no routine, you end up having a lot of distractions, a lot of, no focus on what your intentions are for the day. Now, never stop learning, okay? We come across a lot of situations where we're always learning new things. And maybe this video perhaps could teach you a few new things, something things that are new. A financial market education forms the foundation of any successful trader. Okay, there's certain different scenarios in trades that I come across that are still new to me. Certain catalysts that drives a play. I mean, you got, once upon a time reinstatements didn't drive a play, reinstatement filings. Certain, key points in filings where, markets want to rally or people want to rally to a market on a certain catalyst. Some of that stuff changes over time. And, being prepared and understanding and learning that, okay, this catalyst can make this stock move. It's got potential for it. Now, number 3, always have your losses under control, okay? Develop that effective risk management, okay? That is really huge as far as we don't want to compound losing trades. We want to compound winning trades, okay? There's no such thing as having 0 losing trades, okay? There's no trader out there, I can promise you, that has 0 losing trades, okay? But if you have a solid risk management in set, your winning trades will far outweigh the losing ones, okay? And the quicker you lose, or the quicker you cut those losing trades, the better situation you're setting up for your portfolio. Remember, guys, your portfolio is the most important thing in this work, and you want to be in control of it. You want to, manage that risk if things go against your plan. And have it in writing, guys. Just write down your entry, your exit, and your risk management points, okay? And be like, if this play really goes against me, I'm using the fundamental catalyst for this play. If it was preloaded and it's going against me, and I'm going to just hold it anyway and keep hoping and holding and hoping and holding, this play is not going to turn around on hope and holding. It just doesn't work that way. So make sure you stick to that plan, and do not, by all means, do not break those rules. Be conservative within those rules and guidelines, and keep it. Now, keeping a trading journal, okay? This is a huge thing. I'll actually, at the bottom of this article, I'll put a link to an online trading journal. I'll go actually pull it up here real quick. Let's see, where do I have it? I don't think I have it in my article here, but I'll go ahead and grab the link here. Hang on. But anyway, this is a site. You can set up a trading journal if you like, if you don't want to have a hard copy, but it's an online trading journal where it shows your entries and exits and kind of your average gain or loss kind of thing. So it's a perfect site for those that want to take advantage of that. But I'll have a link in the description below on this video as well. But another thing is number 5, observe others, okay? We always are observing other players, other plays that they're playing. Spot common mistakes and fine-tune your trading strategy. If you feel like, you could do better, then by all means do better, to work at doing better. If you're not the one chasing the game, there's someone else out there chasing it for you. And, they're winning, they're constantly winning. And you're the lazy guy in the background, just not getting the results that they're getting. You always got to be the hardest worker in the room. Fine-tune your strategies, spot common mistakes, and be able to write those down and take note of them. Why did this mistake happen? My whole achievement on this is I want to overcome that mistake. I want to be able to fix that mistake, and just be dedicated to my, this is not a hobby, it's a business. I want to be able to make productive money from my trading strategies, my portfolio, and be consistent with it. Now, observe others, though. Replicate successful strategies, and learn from the mistakes of other traders. Okay, some traders, it's very few out there that will actually admit a mistake that they made. They're like, oh, sorry guys, I didn't mean to alert that play. I didn't realize it was front loaded, or, had this, bad news about it, or this was coming out, or this was, replicate the successful strategies, but learn from the mistakes of other traders. Okay. If you're going to be the guy that's constantly making mistakes, you better as hell learn from your mistakes as well. Because sometimes people don't want to take the advice of others or take the pointers from others. They're too, their ego's too big. You can't have a big ego in the trading game. I'm sorry. Just a trading ego it just doesn't look good. It's a bad look. But, replicate those successful strategies of other players. If you're watching players that are really doing well over and over again, replicate those strategies that they're using. That we've actually come across a crazy situation with social media, how people can create a facade of how they want to appear to others. Okay. They want to appear successful, but you dig deep and you're like, this idiot don't know the hell of what he's doing, but yet he wants to create that facade that he knows what he's doing. So, don't be blind to it, just observe it, be very mindful of it. The biggest thing I do in my trading thing, I observe a lot of people. I don't follow their intentions of what they're trying to tweet out or push or pump, but I follow people and I watch them. It's good to watch people, observe, and I'm not going to put my money on the line under their discretion, and control your emotions, guys. Don't get overly emotionally attached to a trade, and practice your trading discipline. I've got lessons on these as far as trading discipline and emotionals, but don't be overly emotionally attached to a play. No play is worth, being married to, having a strong relationship with, and just being only dedicated to one play. There's 17,000 plus stocks on the markets out there. There's so many opportunities out there. There's always another opportunity if you miss one. Okay. If you miss this 10 bagger supposedly and it's flying, blah, 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 you missed it. There's always another one, guys. If you trade with strong discipline and you're not just emotionally attached to this play, it's never a good thing to be emotionally attached, because sometimes the biggest the biggest losers of the past, that sometimes where you're so emotionally attached to a play and you're bag holding it and it just keeps hurting your account and bleeding the profits that you once had, you're emotionally attached to it because you could have followed the mistake of another trader pumping it, or you could have not known the common mistakes to fine tune that trading strategy because you were too busy following what the tweet or the demand or the pump play was pushing players to kind of get involved in trying to buy the play. So don't get emotionally attached strictly on what the company is claiming. I trade the trade. If the markets looks like the trade is going to move off of, the chart setup and the catalyst to push it and the rallying of people dedicated to run it, then by all means, it's a trade. But if you're so involved with the company, well, they make 10 million in revs and there's a, $20 billion merger coming into this, but the trade's falling like a rock. It's not working for you. Well, if you keep believing what the CEO is claiming this, or he's diluting on you, or he's, all this bullshit that is just coming out because you're believing the bullshit and you're so emotionally attached to the trade, you fall like a rock with it. No trade is worth hanging on for dear life to, thinking that, well, the company's saying this and saying that. Well, I've seen so many of these company CEOs say one thing, yet they're just spitting crap out the other side of their mouth. I mean, they're diluting on you heavy. They need people to buy up their shares. It takes people, it takes money to make a play go the right direction. And then what does it take to drop a play? Well, it takes people selling the play. It takes companies diluting on you. It takes a lot of downward pressure, even though you believe one thing versus the play going against you. So don't, by all means, never get emotionally attached to any trade, okay? And practice your trading discipline. Learn to overcome that. I'll have other lessons on trading emotions. I may actually have a video on my YouTube on it. But I have so many lessons covering on emotionals because that is a massive thing for new traders, especially to overcome. It's not an easy thing to do. And number 7, remember that the market is neither moral nor immoral. It's amoral, okay? Losses are nothing personal. Even a professional trader takes a hit from the market from time to time, okay? Always never take those losers personal, okay? But if you were back holding this play, you're emotionally attached to it, it's falling, it's falling, it's falling, and then you decide to cut it because the loss is just so great and you decide to finally take it, that is a big emotional hurdle for most people. But if you cut that loss quick, it's so easy to recover it on a winning trade right after that, okay? And there's so many winning traders and there's so many losing trades out there, but it's be able to decipher between the two. But never take those losses personally, okay? If I have a losing trade, I cut it quickly and I move on to the next one. By the time I'm in the next trade, I'm already forgotten pretty much about the losing trade because it hasn't attached to my emotional concept of, wow, that play just hurt my day. It just screwed up my day. It just screwed up the profits or the plans or the goals that I set for today. You know, it all comes back to, how did you start your morning? You know, develop your effective morning routine. Get your mind clear. Get your mind focused on setting yourself up for the day. Don't let those losers, you know, control your emotions or your mindset or your, you know, your whole outcome for the day. Okay, never let it control you. You know, the winning plays will always lift your spirits up, and don't overtrade it. We've got lessons on overtrading too. So, but anyway, what is a trading mindset? Markets are neither moral nor immoral. Okay, they're amoral. The markets have no emotions at all. So it's completely up to the traders how they perceive the markets be. If your goal in the long run is to attain and maintain the status of a trader, it's very important to develop a mindset that helps you observe the markets from an unemotional perspective, okay? Your mindset will ultimately define your reactions during the losing trades or large profits. Will you be able to stay calm during these events and avoid reacting based on your emotions, okay? What if you have a big winner going, you know, in the right directions? How are you emotionally playing that correctly? So many times I see new traders just literally stay latched onto it. Their emotions are wrapped around that play because it's making them bank. You know, they're just completely so involved with it, and the pump tweets are just emphasizing the dedication. You got to keep holding this play without actually consider taking profits. You know, what was your trade plan in the beginning? You know, plays can go and go and go and go, but if you don't understand the technicals of trading, as far as your support and resistance, every resistance breaks, it becomes a new support, and so on, of understanding how these plays are going to work, then you're just holding and hoping and hanging on for dear life as this play is running in your favor. It's great. It's a great situation to be in, but your mindset will not react appropriately when it's time to sell. Okay, there's always going to be a point in this trade where it becomes, okay, it's time to sell. And the sad situation of some of these home run plays, where these plays run and run and run and run for days and months on end, people don't know how to sell when it's time to actually eventually sell. You know, having outlandish and unrealistic price targets make people bag hold the play for dear life because they're not even considering to sell the play until it reaches $300 a share. And they're running it from sub pennies. You know, that's not realistic. I'm sorry. That doesn't happen. But people want to, you know, feed off of that, be so involved off of that, hyped off of that. And the trade may go against them one day. And it's so funny. I actually ran a poll not too long ago on Twitter where I asked some people that, you know, what happened when you had your home run play? Did you take your profits, or did you actually lose on the play when it came down to your entry and below your entry before you decided it was time to quit it? And the pool won on that exact point right there. They cut their loss when it came below their entry and they were finally done with the play. It's like, well, you had this winning play. You had this winning situation. Why didn't you take the profits? Well, you believe, you emotionally attached to the play, and you believe that you don't sell until you hit that price target. And you can't be unrealistic about it. You got to trade the trade, not marry the freaking play, you know? Trend line and support and resistance lines need to have at least 2 price points to be drawn. Okay, this is what a well-trading mindset is all about. A disciplined trader will never let emotions to interfere with his or her trading decisions. Okay, however, bear in mind that it takes much effort to achieve the status of a disciplined trader. You don't become a professional trader overnight in any business, and trading is no different. As one famous trader said, "Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead." Okay. Now, what is a positive mindset? Okay, it's important. As we already said, the market has no motion at all. All motions come from market participants who are still predominantly in humans, okay? This is why chart and patterns and trend following techniques work so great in trading. They rely on well-known patterns of human behavior and taking advantage of that market psychology. Now, however, you have heard that 90% of traders lose 90% of those trading funds within 90 days. It's important to ask yourself, what are the main psychological traits that distinguish the remaining 10% of successful traders from the majority of the other market participants? All of them are human, but a small group of traders still succeed to significantly outperform all other traders combined. While it's very unlikely that they have found the holy grail of trading, the truth is this, that one psychological trait comes very close to it: a trader's mindset. Okay. Number one, get in the right mindset. Okay. Traders can benefit a ton or benefit from approaching those markets from a calm and relaxed mentality. Okay. You've come to yourself that you have no emotion in this game. You've got yourself calm. Everything is, works in your favor, against your favor. And if it works against your favor, you know how to properly, like this, if you have proper risk management guidelines in place, there's no need to worry about trades at all. In the end, what can go wrong? Even if a trade hits your stop loss level, it's not the end of the world. Okay. It's not the end of the world. Losing trades happen all the time. Even professional traders have a winning rate closer to 50% than you might think. With a high enough risk reward ratio, which is the ratio of your potential profit and potential loss of a single trade, you'll still end up in the profit even with a 50% win rate. A losing trade doesn't mean anything personal, okay? Markets go up and down all the time, and you need to have faith in your market analysis. Remember, markets don't have emotions, and traders who avoid succumbing to their own emotions tend to significantly outperform traders who let their emotions interfere with their trading decisions, okay? That is a big thing right there. Who let their emotions interfere with their trading decisions. These guys that don't have zero emotion, but they play along their guidelines and their discipline and their rules, always end up winning those guys who they're emotionally attached to this play no matter what. And, I'll have a lesson on this as far as how some of these pumps work. And some of these big rooms, they need emotional traders to push the play. And it's a sad situation when they don't decide to take profits. Now, having a morning routine may also help a lot to approach these trading relaxed, okay? Try waking up earlier than usual, work out or meditate, and sit in front of your trading desk with a faith in your analysis and your risk management principles. The more preparation you have in your trading day, the more relaxed you feel as a trader, at least for me and my part. That, if I've got my trades already set up, my watch list kind of figured out on paper here, I've written it down either the night before or, that morning. As far as the top plays that had dropped news or filings or such like that, I'm always got it prepared in front of me, and to understand that I'm prepared for the day. I'm relaxed. I'm disciplined. I have guidelines and rules. If this play touches this price target, this is a great area to get in the play, in certain areas like that. Now, number two, always keep learning, okay? Always watch people, always watch things, always keep learning. Education is probably one of the most important factors that separate successful traders from unsuccessful ones, okay? Even if you already have the right mindset, you need to have a solid foundation of the markets to understand the reasons behind certain price moves or market reactions. While there are many concepts in trading worth learning, your best bet would be to keep learning until you find the tools that best suit your needs and trading style. Try to spend at least 1 hour before bedtime to read a trading book in order to get an insight into the practices of other traders, or watch this YouTube video. Okay, there's lots of YouTube videos out there that kind of help in this matter as well. Lots of free content online. It's great. In addition, online trading courses are also a great way to increase your knowledge about the markets as well. Now, number three, don't let losses get out of control. Okay, so many people let these losses just get way out of control, and they come to me like, hey, Mike, I've got all these plays. I've got 15, 16, 20 plays right here all in my account. I'm all red in them. What do I need to do? Well, what was your plan for those trades? Did you have a plan wrapped around those trades? Did they each touch your risk management for those trades? No, I had no plan. I bought it because such and such on Twitter told me to buy it. And he's claimed this and claimed that, and the CEO said this and that. I'm like, okay, well, that obviously was no plan involved with any of these trades. So you end up with a big bag of just crap, just a big bag of doo-doo. And it's crazy. It's crazy because you had no plan for those trades and they end up losing against you. That's like playing lottery tickets and just throwing money away, even though you know they're not going to be winning tickets. I mean, what's great about that? A common mistake among beginners in the market is the way they manage their losing trades. Okay, and this is a huge thing. Don't be a bag holder. Usually, novice traders wait for a losing trade to become profitable again, as they don't want to lose the trade and loss. Okay, they could say, let's say I'm down $1,000 in this trade, but it'll come back, it'll bounce eventually, it'll have news, or it'll do this or do that, and they think of their loss as that's the possible gain they're going to get back just to break even. And that's a sad situation to think about. As you can see, emotions are again interfering with the rational trading decision, which can be very costly in the long run. I've got a following example here. Okay, it's a table that shows how much return a trader has to make to return to his initial balance after losing a percentage of his or her trading account. Okay, this is the amount of the balance loss. Let's say you lost 10% on, let's just say you had a $1,000 account and you lost $100. You lost $100 on a trade. That means you have to make $110 to break even again because of your commissions and such. Now it goes down. You say you lost 25%, you have to make 33% to make it back. If you lost 50% on a trade, you lost $500. $1,000 brought it all the way down to $500. You have to have 100% winner to make your money back. Okay, 100% initial return to bring it back, and 75% it's 400% gain. 90% loss is 1,000% gain. I mean, that's crazy. You've lost $900 and you're down to $100 left. You need 1,000% gains to bring it back, just to bring it back to even. And so many people don't understand that it's so easy to lose even a small amount of percentage. It takes that much greater of a gainer to bring you back. And it's a big hurdle. I mean, it's so easy. Like, yeah, I'm down 25% on this play. Well, then it's going to have to take 33% of a gainer to make you run up, again. And 33 and 100% runners are fairly common within OTC. Big boards, it's not necessarily as common. You're looking at 11% gains as far as a big board plays. They're, not near as leveraged when it comes to OTC. Now, with this said, how many times do we see 1,000%? If you're looking at one play to make your gains, then you're looking up the wrong tree. There's so few of one plays that make a gain that quickly, or depending on your span or patience for the play, to make that kind of money. I try to look for at least 50 or 100% gainers every day. And you're compounding those interests one trade after the another. Okay, you're looking at compounding each winning trade one after the other. Let's say if you lose 50% of your trading account, okay, 1,000%, $1,000, it's now down to $500 account. You have to make 100% return to break even. This can be a very tough undertaking. Okay, you have to make $500 on the next trade. You put $500 in it, you're going to make $500 just to get back to 1,000 again. This can be a very tough undertaking. Of course, it comes overwhelming. Your mindset's all screwed up. You have no patience, and your emotions are all tore up. You're like, man, I'm just losing money. I just ain't making anything. This stuff is just crap. And I go, this guy's claiming, this guy on Twitter just claiming this, all this and this and this, and I better quickly buy it. And oh man, I lost another $100, $200. That play is crap. Nothing is good right now. It's like you're emotionally not working this right. Your mindset is all over the place. Instead, try to manage those losing positions like a professional trader who are very impatient with losers, okay? If I got a trade going against me and I'm losing on it a little bit at a time, I'm impatient on it, okay? I'm ready to kill it as quickly so I can get back in a play that's going in my direction. Let's just say you've got 20 bags, okay? And that's not uncommon. It's crazy how some people, these especially new traders, that collect bag over bag over bag over bag and never sell the first bag in the first place to get out of it. They end up buying a new bag and thinking, okay, well, I can make it back with another bag. And yet they all downfall. Kill losing trades quickly, okay? You've got to be out of a losing trade in order to make it back. Now, obviously, averaging down sometimes can be good, but also it can be very bad, okay? Don't average down on the wrong plays or the certain scenarios of why you bought it in the first place. But losers, it's try managing those losing positions. Okay, get out of those losing positions and jump on the next train that's going in your direction. Let's say you find a play that's similar priced. You have 10,000 shares of this play or something, and you jump into another play with the same amount of shares. You sell that bag and get into another play running in the direction, and you're making money on it. How much better would that be for your account instead of just holding it and hoping that this $1,000 that you're down on this play is actually going to come back up one day, and it'll just be a minimal loss or break even, or get out of that play and run it to another play that's going to go the right direction. Now, let's say if one of their trades is slightly as minus, signaling that their trade setup isn't playing out as expected, successful traders will close that trade and move on. Okay, they cut their losers short, let their winners run. In the long run, this can make a real difference to your bottom line. Number 4, keeping a trading journal and making regular retrospectives. Okay, go to that site, that link, if you guys want to do an online version, or do your spreadsheet on Excel or something, or write it down on a piece of paper. Keeping a trading journal. Another great way to obtain a successful trader's mindset is by keeping a trading journal. Trading journals are like regular diaries, only that they include the trades you make. Journals consist of journal entries, which can cover anything that you think might be important about a particular trade. Write where you entered at and what was your risk plan. How did you come out in the trade? Keep notes to it so you guys can learn from your mistakes. You just don't trade and trade, keep on trading without learning anything that you learned from the first trade. Only that they include the trades you make. Journals consist of journal entries, which can cover anything that you think might be important about a particular trade. Standard journal entries include the currency pair that you trade, the reasons why you got into a trade, its entry, exit levels, and additional market commentaries. Once you close your trade, develop the habit to obtain its journal entry by the trade's profit or loss, and any additional comments which might give an insight into the performance of the trade. Making regular journal retrospectives can reveal a wealth of information about your common trading patterns that lead to the losing trades. Maybe the majority of your pullback trades turned into losers. Your trading journal will show that and help you to improve those trading skills. Once you close your trade, develop the habit to update its journal entry. Okay, read. Now, number 5, observe the market, observe the actions of other successful traders. Okay, one of the best ways to learn a skill is by observing the actions of people who have already mastered those skills. Now, this is going in depth of exactly what we just covered up here a little bit ago as far as these steps, these 1 through 7 steps. Now, number 5, observing the actions of other successful traders. One of the best ways to learn a skill is by observing the actions of people who have already mastered the skill. Okay, trading is no different from any other skill, and replicating the process and work routine of others successful traders can make miracles for your trading mindset. That's kind of what I hope to you guys to help relay this through these videos. Number 6, control your emotions. Emotions play a big role in trading. In an ideal world, there would be no emotions attached to the markets, and all traders would analyze trade setups from a completely objective standpoint. Nevertheless, the majority of traders are still humans with emotions such as fear and greed, which more often than not interfere with a rational decision-making process. Inevitably, there is fear involved with losing position, and greed when a position turns green. Okay, you're just riding this play to the moon, and you've got all the greed in the world that you think it's going to keep going. And it's sad when so many people get comfortable. Okay, when they're green every single day on a play, and they're just so comfortable in this play because it just keeps on giving money. When in one day when it turns red, that's when the emotions turn on. You're like, man, I should have took those profits yesterday. Turns red the following day. Man, I should have took the profits that day as well. It's turning against you and turning against you. Our job as traders is to learn how to control those emotions so that we can maintain a clear picture of the market and make rational trading decisions. This is how Como Shea, trader in George Soros hedge fund, describes his boss' complete absence of emotional attachment to a trade. I remember he says one time he had this huge forex position. He made something like $250 million on one day and was quoted in the financial press talking about the position. It sounded like a major strategic view he had. Then the market went the other way and the position just disappeared. It was gone. He didn't like the price action, so he got out. He doesn't let his structural views on how he believes the market will play out get in the way of his trading. Now, number 7, remind yourself that the market doesn't owe you anything, okay? So many people come in, well, yeah, this trade owes me all this money. I'm going to revenge trade it. Now, one common mistake that many traders continuously make is overtrading the market. Never overtrade, guys, especially after a trade goes wrong. Some traders feel the urge to chase the market for trade opportunities, only to accumulate hefty losses by end of the day. This is not how the market operates. The market doesn't owe you anything, and it might be a wise decision to repeat this mantra every morning you wake up. Some days there are extremely lucrative trade setups, and the other days there might be nothing. The point strongly relates to the previous point of controlling your emotions and having trading discipline. Don't feel angry at the market once a trade turns into a loser. Remember, the market has no emotions about you at all. So sit on your hands, guys. If the day looks slow, nothing is setting up perfectly according to your analysts and your past mistakes and past goals and past greatness within your trades, according to your trading journal that you guys keep, you can understand where you're making mistakes at, understand where you're doing well at. Commonly look at that stuff. Don't be blindly trading one trade after another without understanding where you're messing up or where you're doing right. And work at it. It's a business, okay? This is not just a little throw money at hobby and a wishing well, and it's gonna make money or lose money. The better we understand where we're doing well or doing bad at, the more consistent we can be profitable as traders. But anyway, guys, that's all I got for you today. If you guys want to sign up for my trading class, I do have that coming up here in February. I've got a few spots available. I've actually got a sale running right now at $1,200 for the full course, or $400 a month if you prefer the cheaper method. But normally charge $1,500 for this. It's discounted $1,200. But if you guys are interested in taking some classes, I cover every single basics. Okay, this is a class that runs every single evening of every trading day. Okay, you guys will see my scanner, my trading day live all throughout the day. Everything is recorded, so you don't miss it. It's say if you work a full-time job and you miss it. But anyway, I just want you guys to be able to, if you guys are interested in this, you can go to the website. I'll have a link in the description. But going back to this, change that mindset, guys. Improve it, work on it. It is not an overnight success. It is a constant grind. Sometimes it takes weeks, months, years, just depending. Everybody's got their own learning curve that consistently, finally gets built to the point to where, oh man, I've got this. I finally have figured out trading. I finally be able to be consistent with every single trade. Even so, like we talked about in the last lesson, every time those winning trades, those winning trades are great, but those losing trades, I won that losing trade because I went along with my rules and my guidelines, and I succeeded that losing trade as well. But anyway, guys, that's all I got for you today. Feel free to comment, DM me on Twitter if you like as well. But anyway, guys, subscribe, like the video, and I'll see you guys on the next one.